Folks, are you looking for stocks that can turn your small investment into massive gains? Then this video is for you. Because today we are diving into 3 AI-powered stocks that have the potential to make you rich. These are not random picks thrown together for entertainment. These are stocks backed by strong fundamentals, a clear strategic vision, and the confidence of Wall Street analysts who see significant upside potential. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first stock on our list is Deere & Company, trading under the ticker DE on the NYSE. While most people associate Deere with green tractors and traditional farming equipment, the company has quietly transformed itself into a global leader in precision agriculture by embedding artificial intelligence into the very core of its products and services. This isn't just about adding some tech features for marketing appeal. Deere's AI-driven approach is solving real-world problems that farmers face every day. Financially, Deere has had to navigate the same cyclical downturn affecting the agricultural market as a whole. In Q2 2025, the company reported net income of $1.804 billion, down from $2.37 billion in the same quarter last year. For the first 6 months of the year, net income stood at $2.673 billion, compared to $4.121 billion in the prior year. Revenues fell 16% in the quarter to $12.763 billion and dropped 22% for the first half of the year to $21.272 billion. Net sales came in at $11.171 billion for the quarter and $17.980 billion for the 6 months, versus $13.610 billion and $24.097 billion in the previous year. On the surface, those numbers might look like a reason for concern, but context is everything. Even with lower sales, Deere is maintaining healthy profitability, thanks to disciplined execution and strong demand for its AI-powered products. The company's stock currently trades at $510.37, and analysts remain bullish with an average 12-month price target of $554.47, with some projecting as high as $750. That's an 8.64% upside from current levels, with the potential for much more if agricultural markets recover and AI adoption accelerates globally. Looking ahead, Deere's growth story is about far more than selling farm equipment. It's about dominating the precision agriculture market and becoming the backbone of a tech-driven farming future. The second stock on our list is Sherwin-Williams, ticker SHW on the NYSE. At first glance, you might think of Sherwin-Williams as simply a paint company, but that perception is outdated. Today, Sherwin-Williams is leveraging artificial intelligence in ways that are revolutionizing how paint is manufactured, sold, and delivered. The company's Color Expert app uses machine learning algorithms to analyze images of a customer's space and predict the perfect color schemes based on lighting, room size, and aesthetic preferences. This is more than just a convenient tool. It's a customer engagement engine that collects valuable data on consumer preferences, feeding directly into product development and targeted marketing. On the operational side, AI-powered predictive maintenance systems keep manufacturing plants running smoothly, reducing downtime and improving product consistency. In Q2 2025, net sales increased slightly by 0.7% year-over-year to $6.31 billion, with sales from stores open more than a year rising 0.8%. However, earnings were impacted by higher expenses tied to a restructuring initiative, increased building costs, and investments aimed at seizing competitive opportunities. Diluted earnings per share fell 14.3% to $3 from $3.50 in the same quarter last year, while adjusted EPS declined 8.6% to $3.38 from $3.70. Despite these headwinds, the company continues to generate strong cash flow, returning $716 million to shareholders in the quarter through dividends and share repurchases. Management also adjusted full-year 2025 guidance, now projecting diluted EPS between $10.11 and $10.41, and adjusted EPS between $11.20 and $11.50. The stock currently trades at $352.16, and Wall Street sees more upside ahead, with an average 12-month price target of $384 and a high forecast of $420, representing a 9.04% potential gain from current levels. The long-term growth potential for Sherwin-Williams lies in its ability to combine its dominant market position with advanced technology that strengthens operational efficiency, personalizes the customer experience, and supports premium pricing in an otherwise commoditized industry. Last on our list is JP Morgan Chase, ticker JP Morgan on the NYSE, the largest bank in the United States and one of the most influential financial institutions in the world. What sets JP Morgan apart is not just its size. Total assets are approaching $4 trillion, but its aggressive push into artificial intelligence as a core business driver. The bank employs over 2,000 AI professionals who are applying machine learning across every aspect of operations. In risk management, JP Morgan's AI models have slashed false positives in anti-money laundering monitoring by 95%, a massive efficiency gain that frees up resources for other critical functions. For its institutional clients, the newly launched IndexGPT platform is revolutionizing investment product creation by automating the development of complex, thematic portfolios tailored to client needs. This is not just a convenience. It's a competitive edge in the high-stakes world of institutional finance. Financially, the bank remains a powerhouse even in the face of softer revenue. In Q2 2025, JP Morgan reported revenue of $42.1 billion, down 11% year-over-year, and net income of $14.6 billion, a 17% decline from the same period last year. Profit margin stood at 35%, down from 38%, and EPS came in at $5.25 versus $6.13 in the prior year. Despite these declines, earnings still exceeded analyst expectations, underscoring the resilience of JP Morgan's diversified business model. The stock trades at $288.76, with analysts targeting an average price of $307.20 over the next 12 months, and the most optimistic projections hitting $350, a potential 6.39% gain from current levels. Beyond the numbers, JP Morgan's true growth potential lies in its ability to scale AI solutions across its massive client base, unlocking efficiencies, enhancing risk management, and delivering innovative financial products that competitors can't easily replicate. When you look at Deere & Company, Sherwin-Williams, and JP Morgan Chase side by side, it becomes clear why these three AI-driven stocks stand out. They represent a powerful mix of industry leadership, cutting-edge technology integration, and long-term growth potential backed by solid fundamentals. Each company is using AI not as a gimmick, but as a core strategic tool to solve real problems, increase efficiency, and strengthen competitive advantages. These are companies that are already leaders in their respective fields, yet they're acting like ambitious disruptors, constantly innovating and adapting to stay ahead. Wall Street's bullish outlook on all three only reinforces the idea that these stocks could deliver substantial returns for investors who act now and hold for the long term. Well, that concludes our list of 3 AI-powered stocks with huge growth potential that could turn a small investment today into significant wealth in the years ahead. The opportunities are here, the strategies are proven, and the market is starting to take notice. The only question is, will you be positioned to profit when these companies reach their next level of growth?